All right, how you doing, friends? Ernie here, and this is the 0 days to expiration final hour trade. This is an experimental trade that we are now in our 45th iteration. Can you imagine that? An experiment where you try a trade 45 times. We're betting minimal money, minimal risk, and the whole purpose of this is to try to discover the efficacy of a trade using the 0 DTE strategy in the final hour. Now, we've managed to do about 40, I think it was 43 of these trades. Is that right? 42? Something like that. And with 8 no trades. Is that right? No, I'd have to take a look at that. But anyways, 37 trades, 36 trades. And 8 no trades. So that brings us up to about 44. And I think we're at, this is the 45th trial. Whatever the accounting, it's correct in the description below. So that's that. So when we first started doing this, of course, there were different market conditions, and we had a lot of success, maintaining about a 75 to 80% win rate for a while, at least for the first 20 or so trades, and then since then it has gone the other way, and now we're down to about a 63-64% win rate, but the return on capital is still right up there, so it's still a big time winning trade. But this is to be expected. If you were to take a look at the long-term log of any kind of trading strategy like this, you're going to go through periods of wins and losses and consecutive wins, consecutive losses, that sort of thing. And that's one of the reasons why I'm committing to do 100 of these trades, to at least get a fairly good snapshot of what this might look like in real life. So, I mean, if we just did like a few trades, 2-3 trades, and said, "Oh, it's a winning trade, let's do it," that would be completely irresponsible. So that's what we're doing. All right. So, Ernie, the sound on the gain on your mic is turned way up. Well, let's see. Where am I getting my mic from? It's off the Rodecaster. So let's take a look at that. Hello. Well, that's, maybe compared to where I was before, it's way up. But let's see. We can adjust that just a little bit. Maybe that's a little bit better. We take a look, see how I peak. Even right now, I am peaking right there. Right there. That's where I peak. So let's see. Testing. 1, 2, 3. Yeah, that's just about right. Oh, I know what it is. How's it look now? Okay, testing. 1, 2, 3. I don't know. According to the meters, it's saying it. Maybe you need to turn your volume down. Just sounds like some clipping. Yeah, I am not an expert at audio. Let me put it that way. But what I did do is I got rid of the background noise, and I'll still work on this. I'll see if I can. Let's see if we can bring this down just a little bit. Tell me, how does this sound right about here? Is that a good level? Yeah, so what I did was I just turned it down. I'm also using a different mic. I was using this boom mic that was away from me a little bit, and now I have this Shure SM7B right at my mouth. So it's like this far away from my mouth. But anyways, hopefully that sounds okay. I'm trying to, much better? Okay, good. Good. Glad to hear it. Maybe I have to turn my... Oh, I know why. My headphones weren't turned up appropriately, and now I can hear what you're hearing. All right, I'm good. No, that's fine. I want to be dialed in on this, everything about this broadcast, because I want it to be a good quality and so forth. And like I said, I just completely redid all of the audio last night, and I did all kinds of experimenting, and then sometimes it takes, a trial or two before you get everything dialed in. I had this horrible background noise, and I wanted to get rid of it, but I think I've gotten rid of the background noise. So, and plus we have, special effects, right? All right. Get a little music going. Sounding good? All right. Yeah. All right. So we're going to add all kinds of neat stuff in here. Of course, we have the obligatory clapping. Let's see. All right. Let's get down to business here. So before I came online, I sent out an alert to the group, to the Discord, to our service. And one of the things that we've been discussing about this particular trade is that we noticed that during consolidating periods, that the POC over a period of time during that consolidation seems to be where the trade is most likely to land. All right, and so in this particular case, that would be, let me just show you. Need to go to that. All right. So first of all, I want to point out that we didn't take a trade today. And I'll tell you why. If you look at my scenarios, now normally you look at my scenarios and say, man, Ernie, how do you get it like right on the button almost every single time? Well, today it wasn't like that at all. It was really bad. That was about as far off as I could possibly imagine. I thought we were going to, based on some of the economic reports that are coming out, Powell speaking, that we would have a big move one way or the other. Particularly after this big move from the consumer confidence fiasco, right? And it looked like we were going to get some volatility and get going, and then it just died, and we just hung right here. So we're continuing with this consolidating move after this big move down, and so that was a miss, right? So we didn't take a trade. If I'm going to be that far off on my analysis, then why would I take a trade? I have absolutely no business, suggesting a trade, seeing that my hypothesis is like totally wrong. And that's okay, you don't have to take a trade every day. We have 5 opportunities every week at this final hour trade, and I take 3, potentially 3 trades during the week. Some people also trade Tuesdays and Thursdays. I choose to move away from Tuesdays and Thursdays, at least for the moment, because of a number of reasons. I like the cadence of not trading Tuesdays and Thursdays. And Tuesdays and Thursdays are relatively new in the 0 DTE world on the SPX. And so there's still, I think, liquidity issues. So they're getting better, though. There's no doubt about it. All right. So anyways, we determined that the POC, or I determined that the POC for the last 48 hours is sitting right at about 33.30. And so I issued an alert where the center strike would be on 33.30 and then 10 wide. So that's a butterfly that is centered on 33.30 and 10 wide. The cost of the trade I thought would be anywhere from $1.25 to $1.50. That would give you approximately a 1 to 7 risk to reward. Now I know that we were trying to do trades that were 1 to 10 in this final hour, and over the past, say, 3 weeks, the majority of the misses have been within just a couple of strikes. I mean, we come right up, right up to that spot, we're right there, right, and then it just not making it. So, while the analysis is good, we're just coming up short by that much. So we talked about this a little bit and thought that we could relax the 1 to 10, maybe bring it down to, as low as 1 to 6, 1 to 7, 1 to 8, right in that range. And so that's what I had suggested prior to coming on here. Now, I'm sorry about that because, I already issued the alert and I don't know that it's really valid right now. I mean, unless we get a big move down and you can get back in. But that was the trade. So let's zoom in on this and see if we can get a better look at what this actually is.
New visitor.
So big consolidating move.
New visitor.
All right, and at 38.30 is the actual POC over the last 48 hours. If you took that entire consolidating move and, right? I said 33.30. How could I do 33.30? That's crazy. But if I said that, maybe I did. I don't know. Is that what I wrote in the room? I doubt it. Or did I? So anyways, it is 38.30. Everybody wants to correct me all the time. And maybe I deserve it. But at any rate, 38.30 is where the POC is. Obviously, it's not 33.30. That would be crazy. Right? Yeah. All right, so the alert says 38.30. Yeah, that's all right. So that's what it is, 38.30. I can even take a look at the alert. We can go back here and we can see. Here's the alert. 38.30, 10 wide, $1.50, right there. This is my call for the final hour. Made it 3:12, just before we came online. Here.
New visitor.
I really do appreciate people, keeping my feet to the fire because it's tough, running a service with, hundreds and hundreds of people and trying to do live streams and mini streams during the day and supporting the people and doing all the trades. I am bound to make mistakes. Bound. All right. So the trade would look something like this, and it's already well in profit. So we're sitting right there. So in any rate, I believe that the idea of coming closer to the money, not putting the trade that far out of the money, is really something that we're going to follow through with more of these trades. Quite frankly, had we shaved one strike off of the past, 10 or 15 trades, we probably would have had another 4 or 5, maybe 10 winners. I don't know how many more winners we would have. We would definitely have more, that's for sure. And we would have probably been deep in and maybe even, pinned some of those trades just by one strike. That's how close we've been. It's come right up to it, right up to the edge. And it's feigned profit. It's gotten it, and then it pulls away. So that's, that is a result of our continuous improvement process. We are constantly reviewing everything that we do, taking a look at what we do right, what we do wrong, what can be changed for the good going forward. Now, of course, in the experiment, you're trying to keep everything relatively stable, and we have. We're basically following the exact same philosophy, same methodology as we do on our other trades. It's just compressed down to that last hour. So let's see here. Got some good profit. I'm wondering, should I just get out or should I go for it? What are the odds that we're going to stay right inside here? I mean, the idea is that there's a propensity for price to hang right out at that POC. Now, is it the POC for the day? Is it the POC for the move? I personally think it's the POC for the move, and it's shown that in past trades, other consolidations after bear market rallies. So that's the context that we have a bear market rally and then consolidation. And when we were up there, we missed a few trades, and those trades both, I think there were at least two opportunities on this rally that price ended up almost right on the POC of that move, and I can show you that. So maybe if we go to the 15-minute. So what I'm talking about is, okay, here's the rally coming up, and then this consolidation. And so, almost got this one right. Got this one right, but on each day, let's say on the 27th, so here was the POC. And so what we're saying is the close generally hung around right around there. And so now what we're saying over here is that the close will generally hang around this POC right here for this consolidating move. Now this has like two parts to it. It has some consolidation back here that can be influential. And then of course this sideways move here. Up here, if we look at when markets closed, so this market closed right here, almost right on the POC. So I could probably put an arrow. It was like right there. Yep, right there. And then on the next day, it closed right here.
Returning visitor.
Closed right there. Again, right on the POC. And then on the following day, of course, this day, we just tanked early. So obviously that wasn't going to work there. So on those 2 days, it closed right on that POC. Now, of course, what did it look like prior to that? I don't know. Did it look like that? Yeah, it was generally in that area. See?
New visitor.
On this one, it may have been lower. It's hard to tell. So you have to go, back in time and try to recreate everything. All right, so we're moving down now. We made a nice move up. We retraced it, came right back down. Still, we're holding steady that And this is probably an opportunity for people to get in too. I mean, if it was a dollar, let's see, what is the price right now? Oh, the price is $1.95, $1.85. But it's almost there. Almost to $1.50. I think that $1.50 is about the most that I would pay for this. So the price right now is $1.95. I wouldn't take it at that. I don't, I think that is just a little bit much. Now it's 210, so it's definitely moving in. So there's a good, I mean, that's a good, I like that. I like that idea. JB says entered 5 wide for 70 cents, right on that, I'm assuming on that same POC. Let's see what that would look like. Excuse me, sorry. So here's basically the identical trade, only 5 wide. And right now you can get it for 40 cents. Maybe even less.
Returning visitor.
Well, we could be wrong on this one too. I was right for a while and then it moved away. Let's take a look at where our spread is located, and we'll create a graphical representation of it. So it is 21.38. So I'm going to draw a box that represents where it is. All right.
New visitor.
$38 and 21. Let's zoom in on that. All right, so there's our profitability box. This would represent the close on the right. And we'll add that's the expiration box. We'll add a profitability box too. We'll make that just 1px. And so it extends above and below like that.
Returning visitor. Returning visitor.
So the center strike that we were going for was 38.30, which would be right there. And then we made it 10 wide. Plenty of time, 21 minutes left. So in this case, it moved right into our strategy. I think you should still be able to pick this up. Let's see, what is the price right now? Yeah, it's almost right at $1.50. That would have been my, my max price. I would have preferred it at $1.25. That's what I originally put in the as a stage trade. $1.25 would make that a 1-to-7 risk to reward. $1.50 probably closer to 1-to-6. All right, let's spread some of this out. Get a nice look at it. So we can see that volume profile build. We'll make it bigger so that any moves that come into the market, they'll be accentuated. There we go. Yeah, that looks sweet. Just like that. So again, this green line, I think I'll make this yellow so it's easy to see. That is the POC. Yeah, get rid of him, Chris. You would think that that YouTube could control that stuff. I'm talking about these bots that infiltrate the comments. But when they come up, I quickly ban them. Uh-oh, Magic 8 Ball is weighing in, says 38.22. I don't know. What is the makeup of the Magic 8 Ball? How does the Magic 8 Ball work? So that would be 38.22. Averaged with time decay and rate of change. Okay. Wildly inaccurate. Yeah. All of this is what I call a swag, a scientific wild ass guess. Right? There is no formula. There's no secret code. There's no code 1 or code 2. There are no Zionists out back there, part of the Illuminati that are controlling the markets, telling it where to go. Uh-oh, here it comes. What do you think? Man, that move was just smashed down. It'd be really interesting if you could gain a some sort of visual into all these different orders. There are some good tools out there that can do that. Simons has secret sauce hidden away. Yeah, I don't know. He's getting on in age there. I don't think that he really cares. All right, we're making a move now. Getting back up into that profit tent. So I think we're going to, go or stick with this methodology going forward and just play a little closer to the fire. I mean, we have been so close on so many trades, and actually been in profit for just, for brief periods of time, only to end up just outside of it. It's quite a battle right here trying to get back into there. Uh-oh. We're going the other way now. All right, so we got a question here. I got to unpack this question a little bit. I love watching your channel. Thank you very much. Would you advise against using SPX 0-day verticals, a vertical spread, to hedge an SPX iron condor? The whole idea of a hedge really bothers me. Either make the trade or don't. Traders don't hedge. In fact, most day traders have no idea what an actual hedge is. A hedge, in the traditional sense, is hedging a cash market physical item, right? For a very specific purpose. To hold their margins steady and their costs steady while they go to market, right? You can do the same thing with equities as well, but I don't know. You don't hedge, one trade over the other. Either you're right or you're wrong, right?
Returning visitor.
The best way to trade is to trade asymmetrically, take very, very small risk for huge outsized profits, and then you don't have to worry about hedging. If you're hedging to try to lower your cost basis, you're also lowering your potential for profit. So I say just screw it. Just, go for it. Just take smaller risk with a more out of the money trade. All right, so there's something that will never happen to us. We will never get stopped out. There's no reason for us to get stopped out. And, playing that game, our risk is the cost of the trade. And that's the risk that we accept. What we're hoping for over the long term is that our average return on capital is going to far outstrip the risks that we take. And we do that by trading asymmetric trades. And then there's no need to hedge, there's no need to roll, there's no need to put stops. All of that goes away. All you need to do is concentrate on not managing your risk. Managing your risk is for fools. You want to manage your profits. When you're managing your risk, you're managing how much you're going to lose. When you manage your profits, you're managing how much you're going to win. An asymmetric trade is where the risk to the reward are completely offset from one another. So in other words, most people put on options trades that are maybe 1-to-1, 1 part risk, 1 part reward. Or actually most people put it on exactly the opposite of that. They'll put on like 2 parts risk, 1 part reward, or even worse, maybe 8 parts risk, 1 part reward. That is also an asymmetric trade, but in the wrong direction. We completely flip that and make our risk extremely small and our potential profit very, very large. So in this case, this trade here is about a 1 to 6.5 to 1 to 6.5. So 1 part risk to 6.5 potential profit. So if we land anywhere near the center, we will make, 300, 400, 500% of the risk that we take on. Well, yeah. I mean, the cost of the trade, it's not even a stop. See, by putting a stop, you're guaranteeing a loss. If you hit your stop, you've lost. By doing it this way, just setting what your defined risk is, there's no stop. It can go down and hit your stop and then come back and win. Yeah, I don't like this price action. I do not like this price action. I think the market is giving up here. I think the market is setting up for its next leg down. No, it's not a binary trade, Mr. Radio. But yes, you are setting your risk, and that's what you're accepting. You're accepting the risk. You're saying that's what I'm putting on to try to make some outsized profit. I know you never considered that. That's because most retail traders never consider that. Because all they've ever been taught is high probability trades, which are a farce. There are no pro traders that trade that way. Let me just let you in on a little secret. Well, I shouldn't say no. I'm sure that there's a few here and there. But, they're not winning because they're doing it that way. They're winning because their intuition is great and they have great tools and strategies. Yeah, I thought that this was going to happen. The price action just didn't look right. It looks like this market wants to step down again. See, the other thing is that when you are in an asymmetric trade where your risk is very small, you're not sweating the loss because you're taking a tiny risk. You're not anxiety-ridden. You're not biting your nails. You're not saying, oh, I wish I did this or I wish I did that. It's just another trade. Liken it to building a house and hammering in nails. Each nail is no better than the next nail. If one nail bends over and becomes crap, you yank it out and put another one in. We have less than 6 minutes left, so it's got to get a move on if it's going to hit that POC. you know, it's done this run up a few times and then just failed. Come on, baby. Let's do it. Let's cheer it on. All right. I got to cheer it on. Come on, let's go. Go, go, go. Well, we got to break this little nub here and get up to this next. Let's see here. Let's go to. Let's watch it this way. How can we watch this another different way? How about we watch it like this? Is that good? Is that more exciting? Is that more exciting there, like that? It's not in focus. Camera's focusing on me. What trend is down? There's a trend? Everything has been going sideways today. We're focused on the POC for the last 48 hours, the point of control, the level that has the most extreme volume. All right, I am taking this profit here. I don't see any reason why I shouldn't. Let's see if I can. Come on.
New visitor. All right, so we had a little winner there.
No, I got out at,
New visitor.
I don't know what I got out at. 250, 285. I think it was 285. Well, Void Realms, you can pat yourself on the back. Yeah, I'm not exactly sure where that ended up, but it was a win, so that's all that counts. Let's see here. Yeah, my system is not giving me my pricing right yet, but I'm pretty sure it was at 285. All right, so there we go. We get to add another winner to the trade. Let's see, where is it going to go? There's the big question. Where's it going to go? All right, so back to the big head. All right, that was fun. So there's the slight modification to our strategy. We are definitely going to abandon, trying to get that 1 to 10. Unless we have just unbelievable odds, then we'll take it. And, if the price is super low. But we'll try to stay somewhere between 1 to 6 to 1 to 8. And that will move us about a strike to 2 strikes closer to the final resting place, hopefully. And I think that that's probably the way to go. I mean, at least we'll be more in the game. If we were sticking to that 1 to 10, we would definitely be out of profit there. No, it's because I have it gives me my fills. It's because I have this Fidelity stupid web-based thing, and just don't see it. It hasn't posted yet.
Returning visitor.
New member, Gloria, you're welcome. Thank you for joining. Excellent. Oh wow!
Visitor.
You're at 38.15, so you probably did okay. Oh no, that missed, right? That missed, unless you got out early. Fantastic. $3.10. That's awesome. $1.50 and out at $3.10. All right. So good to have a win. We had a really good win about a week ago, something on the order of 400 or 500%. But it's been a little bit dry, but I think that this change is going to make a lot of difference, and we'll continue with it and see how that works out, and continue on. This is the 45th trade that we've made live in front of everybody, showing exactly what we do, and we'll continue doing that right through. I'm going to do 100 instances of this, and then from that we're going to compile our information and figure out what is our best route going forward. Do we adopt this strategy into our basket of strategies, or do we kick it to the side and put it back into the curation bin? But I think it's going to be a positive strategy, and by instituting that continuous improvement process that we employ every day, every week, I think we're going to come up with a winner by the end of this exercise. All right. Well, look at that. John was in for 45 cents out of $1.05. Can't argue with that. 100% winner. Fantastic. All right. And, this is the way I'm going to look at this trade is that we have our normal trade during the day, and that's kind of our bread and butter trade. And then this trade will be a good supplement to that, right? If you can just win, even if you win just 50% of the time and keep your return on capital up in the 150, 200% range, it's going to be a fantastic winner in the long run. So you can have a very low win rate and still have a very high, positive outcome over the long term. So, and if we can improve that win rate just a little bit, that'll just crank up the return on capital. So I think we're getting there. But we're not even halfway there yet. We got a long ways to go. And we'll do other similar trades like this as time goes on. By the way, if you want to join our service, go down below, click, do the trial. Go to 0-dte.com/try. Get a 4-week trial and learn all about our strategies, our methods, our process. Take the course, commiserate with all the other traders there, hundreds and hundreds and hundreds of traders, all very active in that group. And I think it is the best trade room that I've ever been part of, by far. All right. Very well monitored, managed, no jerks, just all great people. All right, there you go. And on top of that, you get world-class support, coaching, and mentoring the entire way. Our goal is to help you turn into a professional trader. All right, now time to go. We'll see you tomorrow with another final hour trade, 0 DTE style. Peace.